And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is the founder of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
I'm doing amazing. I'm gaining tons of weight here during the holiday. It's awesome. I know you can't tell, but I just had surgery on my right shoulder, so it doesn't move at all anymore. It's kind of stuck in place. So.
Aww, well, I hope you heal quickly. You look great. You can't tell that you just had surgery.
Well, it's a great excuse to put on weight here, I'll tell you. And I get enough calls from people telling me I'm too fat for TV, so what are you going to do?
I don't believe that for
Stick to radio?
Second. Well, I just have to ask you right out of the gate, Stewart. Obviously, things have been so incredibly busy for you. Let's talk a little bit about what life's been like in the office before we jump into the show today.
Yeah, I mean, we're just wrapping up. Obviously, I'm done for the year here in terms of planning and so forth, but it was crazy. I mean, honestly, I was working 7 days a week into Sundays as well to make sure that those quarterly reviews were all done. And you know, people, you know, the message that we preached was, you know, Roth conversions, tax planning, et cetera. And so we obviously had to deliver on that. And, you know, it was a 7-day-a-week job here for the last month.
Wow.
Yeah.
I know you've been extremely busy.
Yeah.
Well, Stewart, in case someone is in the audience today and they're wondering, let's just say 4 things that they should be looking for in a financial advisor. Let's talk a little bit about what some of those things are. For instance, what is a fiduciary?
Yeah, I think you just nailed it there. I think a fiduciary is somebody who works on behalf of their client and makes sure that their client's interests are put above their own. And our financial licenses as fiduciaries, a Series 65 license, ensures that we're not allowed to have any undisclosed conflicts of interest. We're not allowed to receive commissions from securities funds. For example, if you have a mutual fund that has these super high fees built in, we're not allowed to benefit from that. So a lot of what that does is it really helps fiduciaries choose what's best for you rather than what's best for them. So number one, most important thing when it comes to finding a financial advisor is make sure they're a fiduciary. Super important. I think, you know, another thing, if we were to think of another thing, I'd say, you know, find an independent advisor, an advisor that's not beholden to a single group of funds or a single company. Because oftentimes you realize that the companies push certain funds because it affects the way they get paid or it affects their company's bottom line. We don't have any of those sort of conflicts of interest. We're very independent. We have, you know, custodians at the 2 or 3, I guess it's 2 now major custodians, which is Fidelity and TD Ameritrade. We have clients at both, and we can manage assets there as well. And we have no real preference as to which one they use. They're both great, great custodians. I think the independence is a really important thing. I also think it's important to make sure that you have what we call a holistic planner. And Cynthia, what I mean by holistic planner is that you want to make sure that they look at everything to make sure that no stone is unturned. And what we mean by that is, of course, they need to be able to look at your investments. Super important. But they also need to know how to do real retirement planning, cash flow analysis. To me, the most important thing is taxes. We keep preaching taxes, 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 and I'll tell you, we have a tax office. It's a ton of work to do, but you need to make sure that your advisors are competent in the area of tax, or that they have a staff in-house that are. Oftentimes the right hand doesn't know what the left hand's doing when it comes to tax planning, and your financial advisor will say, hey, you know what, you need to go do a Roth, and then they'll say, okay, well, how much should I do? Well, you know what? You may need to talk to a tax person about that. If you're getting that kind of answer, it's time to find somebody that can look at the whole picture. I think that's super important, Cynthia.
Absolutely. So also going down that list, I have to ask you, what about someone who specifically specializes in retirement, Stewart?
Yeah, I mean, our clients, I get asked the question all the time, like, who is your ideal client? Well, for us, the people we want to call our number and to take advantage of our opportunities are people that have taken retirement serious, that have spent a lifetime putting money away. They take it seriously. They know what their role is, that they need to put it away, but they're lost. They need help, or they need better help than what they currently have. I think retirement planning is a really big deal, and part of that is making sure that their money is going to last a lifetime. Oftentimes, what you don't want to do is put away all this money and then, die with all this money and never get to enjoy life. If we have clients all the time that, that come into our office and are just frozen because they don't know what to do. They're so scared of running out of money, they never actually get to enjoy it. And so I think that's a huge paralysis for people. They've saved all this money and they just look at it, and what's the point? How many, how much did you give up during your life to be able to put that money away?
Yeah.
Don't you think it's time to be able to enjoy it and also know it's not going to run out? And listen, whether you have $100,000 or $10 million, you just want to make sure that you have the best possible life and know that it's going to last a lifetime.
Absolutely. Stewart, what about someone who's actually knowledgeable about insurance, if you will?
Well, I think that's another thing that's really crucial in the holistic plan. They need to know insurance because, I would say I'm agnostic to the, products. To us, there are some insurance plans that really make sense to have in force. Are you adequately covered for life insurance? Does life insurance make sense for you? If you're looking to pass assets, I had this client, for example, in the Bay Area, in Discovery Bay, California. It was honestly one of the longest term clients I've had. Had no business managing money 20 years ago and handling funds, but somehow they trusted me at the time, and I'm blessed and glad that they did. But when her husband passed away unexpectedly, she was just sitting on all these millions of dollars and just so concerned that she was going to run out. But she wanted to make sure the kids were taken care of. Well, what we did is we set up a life insurance plan to make sure that when she's gone, the kids are going to get millions of dollars, and she can go spend every darn cent she has in the bank, and they will still be fine. And I think that's an important thing to know, that even if you spend everything, the kids will still be taken care of. For other people, they don't care about leaving money to the kids. They just want to, what do they say? Bounce the last check out to the undertaker on the way out. Right?
I heard that.
So I think that's important. Also, estate planning. We've been when we created asset preservation, it was founded on being able to deliver estate planning to people that weren't named Rockefeller. And so when it comes to living trusts, it's really, really important. If you own a piece of property and you have some substantial savings and you don't have a living trust, it's usually a bad idea. And we've been doing business with the same attorney for 15 years, doing trusts with us. He's phenomenal. And I think it's important to make sure your advisor has access to that as well.
Absolutely. Well, Stewart, I know that you have a very special offer to present to the viewers at home today. Let's talk about what that is and then open the phone lines.
Absolutely. So if you give us a call today at 833-652-7829, what we're offering you today is a complimentary portfolio review. And in that complimentary portfolio review, we'll tell you whether we believe your advisor is acting in your best interest. Are they acting as a fiduciary? Or are they benefiting themselves? We'll let you know. And if what you have looks good, we'll let you know as well. All you have to do is take action today. And, it's the holiday season here. Give yourself this gift. It's a complimentary portfolio review, but you have to take action. Give us a call at 833-652-7829, or I'm going to pull up a QR code here. If you click on that QR code, this little goofy code that's right here, I'm trying to point to the camera, right? It's never done that before. Good, yeah. Right? It's like a weatherman that you click totally on that there. That little code there will take you directly to our website at www.apsitaxes.com. Click on the button that says Complimentary Portfolio Review. We'd be glad to help, but you have to give yourself this gift. Take action today.
Stewart, thank you so very much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We do have to take a very short commercial break, but don't go anywhere. When we come back, I want to talk to Stewart about the difference between tax preparation and tax planning. You don't want to miss his response. Stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is the founder of Asset Preservation Tax and Retirement Services. Stewart, a wonderful show that we're having today and talking a lot about the importance of course, planning properly for retirement. But one of the main things that you're so passionate about, Stewart, would be the tax planning piece. So I'd love to talk to you a little bit about the difference between tax preparation and tax planning.
Yeah, I think, the one impact that I think we've had locally here is that we're starting the conversation about tax planning. And, what do they say? Imitation is the sincerest form of flattery, right?
Yes.
And, some of our, I'll call it competition in the marketplace has started mentioning it on, their podcasts or radio shows or even TV shows. So it's awesome that they're kind of following our lead. But the one thing is, you need to make sure that you understand the difference between tax planning and tax preparation. Not just talking about it, but being able to have a plan to implement. And tax preparation is what we do, from February 1st to April 15th. And for the last 2 years until May 15th, it's a really tough time. Listen, we did about 800 tax returns last year, and it is brutal. During that period of time, we're not doing taxes to make a profit. We're doing taxes to be able to have the best possible information about our clients and their future. And that also allows us to have, when we have all that data, to be able to test out future scenarios for their case, right?
Okay.
And a lot of people say, well, no, I have a great tax person. They do my taxes. I've been with them forever, and that's great. A lot of our clients, don't want to leave their tax person, and that's great. It doesn't matter to us. But what's important when it comes to, taxes is to be able to do a tax plan. If you are doing your tax planning during tax season, that's a major, major problem because, listen, these advisors, these tax preparers are working super long, 12, 15-hour days during tax season, and they are just burned out. Why do you think, April 16th is the biggest vacation day in Mexico?
Yeah.
Why? Because all these CPAs and tax people are taking off out of town and going to party for the weekend after this, months of just difficult work. I think tax preparation is very important to have done right. It's important that you're dealing with an enrolled agent or a CPA when it comes to your taxes. But tax planning is about looking at opportunity, right? And if you think that for that half-hour meeting you're having with your tax person during tax season, you're going to get that done, you're fooling yourself. You need to make sure that that's done towards the end of the year. Because, listen, I have clients all the time that'll say, hey, should I do a Roth now? It's February. Well, I don't know if you should do a Roth. I don't think you should do it now. I had clients that have won the health and wealth raffle or lotteries. What if they win something like that, or they win at the casino, and they have this unexpected 1099, or one of their family members pass away and leave them money, or some sort of unexpected income flow comes in? Well, you don't want to do a Roth conversion or harvest gains at the beginning of the year, because it basically puts you into a corner and really hinders you from making decisions in the future. And so I would always say tax planning is essential, but that should never be done during tax season. That should be done after the fact, when your advisors, your tax people, your CPAs are fresh. They're not on these long hours. They're back to kind of normal thinking and able to, really put a plan together, not in the half hour that, you typically have.
Sure. Well, Stewart, I have to ask you, if taxes are so very important, why is it that a lot of advisors do not talk about taxes?
Well, honestly, I think, Cynthia, that most advisors are prohibited from talking about taxes. A lot of the big box firms, they actually prohibit their employees from giving tax advice. If you look on your statement, it'll say, we do not give legal or tax advice in the bottom corner. Well, at Asset Preservation, we have that tax office for one purpose, for planning purposes. And oftentimes, advisors know, for example, the Roth conversion is really important to do, right? But they don't do it. Why? It takes an extra touch. It's an additional meeting. But more importantly, when the client says, hey, how much should I convert? And then the advisor will say to him, Cynthia, well, you know what? You need to talk to your tax person about that. And then the tax person says, you know what? I think you need to talk to your financial advisor about that. And once again, the right hand doesn't know what the left hand's doing. You need to do it, but you just don't know how much. And if you do it on your own, it's going to get you into tax trouble, right? There's a lot of thresholds you don't want to pass. For example, let me see if I can pull up unexpectedly this tax. I have a tax slide here I want to show you and where we are today. And if you take a look, going from 10% to 12% on that red chart there is a small jump, in my opinion. Going from 12 to 22 is a huge jump. 22 to 24 is a small jump, and then 24 to 32 is a huge jump. So you want to try to avoid those massive jumps.
Sure.
Even in the Trump tax brackets, which are really low relatively, you want to make sure you avoid those major pitfalls. But there's also a few other things to look out for. Some of the boogeymen out there are, IRMA. IRMA, I-R-M-A-A. What IRMA is a penalty. If you cross essentially the 22% tax bracket, plus or minus a few $1,000s, there's actually a big Medicare penalty if you're 63 or older. It penalizes you 2 years down the road. So you need to make sure you're making an informed decision when you start harvesting gains, doing Roth conversions, and honestly, that takes a tax professional, which is why we have CPAs and enrolled agents on staff year-round.
Well, Stewart, I know you have a very special offer to present to the viewers at home. Let's talk a little bit about what that is again before we reopen the phone lines.
Absolutely. So what we're offering today is a complimentary portfolio review. And what we'll look at in that complimentary portfolio review, we're talking about taxes here. We'll take a look at what kind of tax implications we see. Are there any opportunities there that we don't think you're currently taking advantage of? We'd love to give you a second opinion on what your current situation is, but it does take you taking action today. Give us a call at 833-652-7829, or you can click on the QR code on your screen here. If you click on that QR code, it'll take you to our website, apsitaxes.com, and there's a complimentary portfolio review link there. Just click on that. It asks you a few questions, and we'd be glad to take a look. But you have to give yourself this gift, right? A lot of you say, hey, I don't want anything for Christmas. Give yourself this gift right now. Give us a call, 833-652-7829. We'd be glad to give you that second opinion.
Stewart, thank you so very much. To the viewers at home, that phone number to call is once again on your screen. That number is 833-652-7829. We do have to take a very short commercial break, but when we come back, I have some viewer questions for Stewart, and the next one could be yours, so stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is the founder of Asset Preservation Tax and Retirement Services. Stewart, I was blending that together.
I've got to shorten the name.
I know.
I've got to do it.
I love this part of the show because we have viewer questions. You know, obviously the television show has been so popular for so long. People have been very patient waiting for you to address some of their questions. So I thought today's episode at the very end might be the perfect time. What do you think?
I don't know. It's more about me than it's about them, but no, okay, let's do it. Tell me, what are the questions here?
This is a great question. Stuart, is it wise or unwise to try to start planning how I'll handle the inheritance that I get when my mother passes away? She's in her late 80s and she's declining in health. I expect to get a substantial amount when she passes, so I certainly don't want to ask her what I can expect to get, but I do want to be able to start planning. How do you advise people on this?
Well, you know what, that is a really, really delicate question. You know, oftentimes when you start talking about it too much with your parent, they start feeling, you know, like, hey, what's going on here? You know, my mom's actually watching me film right now, so of course I don't care about an inheritance at all here. She's right over there. But for you out there, I think it's really important, you know, to not cross the line. I think it's one of those things. But, you know, if you're already helping your parents do some planning here, I think it's really important to create some efficiencies in there. You know, I'll talk about my my father-in-law, Larry, who passed away a few years ago. He was a phenomenal person, just a wonderful man. And I remember it was Christmas, towards the end of the year, just about this time, you know, a few years ago. And, you know, he was diagnosed with cancer. He was dying. And he said, hey, Stewart, what can I do here, you know, to really plan these things out? And I didn't want to manage his money. I didn't want to, you know, overstep my bounds, because I say never hire anyone you're not willing to fire. You know, doing business with family is a really, really tough thing. But he said, Stewart, listen, I've worked my whole life for this. What can I do? Well, he was a Nevada resident, and I remember he pulled me outside. We were sitting at his little table in the backyard, you know, in a kind of private setting, and my wife's brother was pretty upset with me that we were talking business as their dad was dying, and you know, I got, you know, scolded about it a little bit, and then, you know, after he passed away, first of all, we created a plan. And we absolutely, you know, executed impeccably. And when he died, and there was time to pass the assets, I remember my wife's brother being really concerned about, oh my gosh, the taxes, because he was a California resident, super successful, you know, party planner at one of the major hotels there in Beverly Hills. And he was upset. He's like, oh my gosh, I don't know what I'm going to do, all these taxes. And I said, hey, check this out. That's what we were planning. Because when it passed, there was no tax bill whatsoever. Why? Because remember, if you're a resident of Washington State, for example, like a lot of our clients are, or Nevada or Texas, there's some efficiencies there in those states, you know. And so we did some tax planning there. We realized the tax consequence at the super low bracket that he was in, rather than the high bracket that, you know, my wife's brother was at. And so we created this plan. And when he passed away and inherited the money, her brother inherited part of the money. it was tax-free. And he was surprised. And he's like, Stewart, now I see what you were doing.
Yeah.
It was about making sure that all of this, your life's work, doesn't just go to the government. I have a lot of clients that just say, listen, I don't want to pay another cent in taxes. I don't want to contribute to this Build Back Better plan. Listen, other people do. I'm not here to judge it. I'm here to help you execute your plan.
Yeah, absolutely. Stewart, thank you so much. We have about 2.5 minutes left, but I want to ask you one more quick viewer question. Stewart, what advantages do exchange-traded funds have over mutual funds?
Well, first of all, exchange-traded funds have a lot of advantages. First of all, there's some liquidity issues. I don't want to get into that too much. They're traded throughout the day rather than settling at the end of the day. For example, in this crazy volatility we're seeing, let's say you have this amazing mutual fund. It's done unbelievably well. But all of a sudden some news hits and you realize, oh my gosh, this market's going to crash today. And you go push that button on your online account, or you call your broker, you say sell. Well, just remember, with a mutual fund, it settles at the end of the day. So you have to go through the entire day just hoping it doesn't continue to fall. But what if it does? With an ETF, it trades essentially like a stock. It's way more liquid, way easier, and most importantly, way lower costs. One of our money managers, who is the biggest money manager in the world, has a bunch of ETFs that they own, that they handle. They're super inexpensive, super liquid in most cases. It's a huge advantage. There's also some tax efficiencies around ETFs rather than mutual funds. For example, we have a tactical asset manager that basically created some ETF wrappers around their portfolio, so it creates tax efficiency. So a lot of the taxes that occur, the transactions that occur inside the fund, are not taxable at all until you liquidate the ETF itself. Unlike a mutual fund, a lot of people have mutual funds that they've never sold or done anything with, but they get these big 1099s at the end of the year, even if they didn't sell anything. With an ETF, you're not going to see those capital gains unless you trade yourself.
All right. Thank you so much, Stewart. We have only a little less than a minute left of the show. Any final words that you want to share with the viewers at home today?
Yeah, absolutely. I think it's really important to, take advantage today of this incredible place we're at in this incredible market. Forget the volatility right now. Make sure that you put yourself into a position where your entire life's work doesn't get cut in half if the market corrects. Protect yourself. Give yourself that gift today. But you have to give us a call. 833-652-7829, or even easier, if you click on this QR code and go to apsitaxes.com, we'd be glad to help.
Stewart, thank you so much. To the viewers at home, thank you for spending time with us. That number is 833-652-7829. Be safe, be happy, be blessed. We'll see you back next week.